Good afternoon. This is daily currency update from the currency desk. What is happening in the recent dollar scenario is that in US we had a bad GDP data on Friday evening. This has impacted the growth outlook. So it's kind of negative for the global economy as the growth would slow down further as the GDP figures are not as per expectations. What we have seen at the same time is the Federal Reserve of US has promised that it will not let the growth dip to a great extent. Hence, all the markets are expecting some stimulus to come from the Fed so that the US growth gets a shot in the arm. In case of INR, what we have seen recently is that there are lots of negative economic health indicators like inflation and the twin budget deficits. So this alongside the RBI firepower decreasing of intervention has caused the rupee to depreciate a lot against the dollar. Also contributing to the rupee depreciation is the increase in the oil prices. Overnight we have seen an increase in the oil price. This would directly impact the rupee weakness. Also the USD index, which was trading above 79 levels, has now come down below 79 levels and is currently trading at 78.75. So this is expected to provide some support for the rupee at lower levels, but then it won't have much impact. Today the Japanese and the Chinese markets are closed on holiday, so in the morning session we might not witness much volatility. USD seems to be at a very highly overbought levels, so we recommend covering your long positions, that is booking your profits in the long positions, and only initiate fresh buy above 53.10 levels in the spot, that too if it is sustained on the closing basis. We have seen lots and lots of weakness in the euro economy, so we expect the euro to depreciate and move down from the current levels against all its major counterparts. But what we have recently seen is that it is holding on to its recent gains and trying to test new highs. This is mainly because of the expectations of the SMP program to be implemented by the ECB. But this seems to be a temporary boost for the euro, and in the long run we expect it to move down. So we recommend a sell on rise. All short positions initiated should be held with a stop loss of 69.65 in the spot. In pound, what we are witnessing is a major appreciation against all major international currencies. This is mainly due to the Bank of England indicating its reluctance to go for another round of quantitative easing. This has supported the pound against all major currencies. What we recommend at current levels is book long positions and enter into fresh long positions only above 85.65 levels. In case of yen, what we have seen is that the Japanese economy has not performed that much as per expectations, but it is better than the other economies like US or other European economies. So this has caused the Japanese yen to strengthen against all major currencies, especially against the dollar. Recently what we have seen is that the dollar has weakened because of the bad GDP data and the growth outlook changing for the US economy. This again is supporting the Japanese yen to appreciate. What would also support the Japanese yen is the safe haven demand. As the uncertainty in the global markets increases, we will definitely witness a stronger demand for yen. Technically we recommend a fresh short below 65.37 in the spot. If 65.60 levels is crossed in the spot, fresh long positions could be taken, as this would indicate a change in trend.